You can see the net profit, $44,000 on a 5K starting account. Let's say we wanted to double it or even triple it. Let's do a $100,000 account, 5 contracts. What's going on? It's Ryan here, CEO and head quant at happytrader.io. Hope you're having a great day. Today we're going to be looking at the ES futures. We're going to do an extended back test using our indicator, happytrader.io, the best indicator available on TradingView. We're going to do a 10-year back test. So we're going to go all the way back to 2014. And it's fitting because today the market is finally resolving to the downside on the 45-minute time frame. And that's going to be a scenario where, hey, maybe it is a buy the dip, maybe it is a retest of these levels over here. But anyway, there's going to be a lot of folks that are going to be trimming positions on days like today, CPI days, and the CPI didn't come in wonderful today, and the market's reacting to that. So sometimes bad news is good news, but today it looks like bad news was in fact bad news. We have asset classes down, ultra speculatives down, although crypto is not getting completely smoked. But we're going to get into the back test. We're going to be doing the long only. Obviously, stocks drift up over a 10-year period. You wouldn't want to get into a long and a short strategy on such a long time frame. And we're going to just be trading off of our proprietary signals, which are uptrend and downtrend signals. We're not going to be dealing with any of these buy and sell signals that might look like some other free indicators available through TradingView. Ours is 100% proprietary, and we're not going to be doing any of that at all. So you can see if we turn on the back tester, the first thing we're going to see is our overlays. You can see the close orders are on the downtrend, and then these buy orders, buy AI, on the uptrend directly aligned. We can go back and we can see that it's just a really simple back test. It's just on a longer time frame. So we're going to get into the strategy tester. We do have our dates preset. So we have January 1st, 2014, and then we have April 10th, 2024, which is today. The first thing we want to do is always make sure deep back testing is turned on. The next thing we want to do is set the account size. Now, most traders who are watching this video probably don't have 100K sitting in their futures account. We're just going to go with 5K in one contract. We're going to turn off the pyramiding, which means just more than one order in succession in the same direction. We're not going to be taking any scale ups or scale outs in this back test. This is going to be one contract with $5,000. Is about as small of an account back test as you can possibly do with the ES. Now you could go into the MES and you could even change this to 1,000 or 500 depending on your broker and the level of volatility. So we're going to go ahead and set this up, and you can see here when we do have the back test, let's just double check everything. We do have everything pre-generated here, and it's pretty quick. This is why we love TradingView. You can see the total closed trades. You can see what the profit level is. You can see the percentage gain. It's going to be derived from the buying power, not necessarily the account size itself. But what I want to point out is that we did have a little bit of a drawdown when we first put this on. So in January 2014, there was a drawdown, and it was substantial. There's no beating around the bush. We started at 5K. We went all the way down to where we would have got margin called. Now, that's the bad news. Now, what's the good news? So the good news is that you can hedge these positions when your primary position goes underwater. You can delta hedge when you're using futures. You can do it using futures options. You can do it using SPY puts. But more and most efficiently, other than commissions, you could use the micro ES to avoid the wash sale rule because you can't take both sides of the ES itself. So what you can do is put your position on. If it goes a certain degree underwater, let's say it hits your tolerance level, which is, let's say, $2,000 under, you could put your hedge on, let it bring you to a delta neutral position, and then once it starts to creep back up to where it's making money, you can start to unwind that hedge. Now, if you're using the ES with the MES and then you have your signals, you're going to be getting alerts for these signals, and you're going to know that you can start to slowly unwind those 10 MESs per one ES, okay? So that's how it's going to work. So worst case scenario, you end up with about 10 times the commission as you normally would trading one ES, but that's a great trade-off to not have to draw all the way down to where you're getting margin called, right? Now that we covered kind of the negatives of you can't time the market, time in the market, all that stuff, let's get into buy and hold of the ES versus using something like Happy Trader, okay? So when you're using something like Happy Trader, you're going to get alerts and they're going to be, let's just minimize this for a second. Every time there's an uptrend or a downtrend alert, you can set on the indicator an actual uptrend and downtrend alert. Buy signal, sell signal, buy and sell here. These four alerts are going to represent on the chart. It's up to you, but it's not really going to affect the back testing because on that closed bar on the 45-minute chart is where we're going to derive our back test signal, and that's how that goes. Now we have our strategy tester up. Now, pretty impressive. In 10 years, we've only had 289 trades. I know some traders out there, maybe some of you watching this video, that might take that many trades in a single month. So this is actually very nice, a great way to do well in the market. And you can see here, if on a 10-year back test, now, yeah, it's 10 years and change, but you're looking at about 88% per year using Happy Trader, where the S&P 500 historically somewhere between 6, 7, 11, occasionally percent per year. And you're just getting a lot of alpha by jumping into these futures. And again, if you want to get into some hedging techniques, you can always subscribe to the channel. We're going to be getting deep into some hedging and showing you what the deal is there. So ultimately, if you're able to hold through some of these drawdowns, and I will admit, some of these drawdowns, they're not for everybody. When you get up to 18,000 off of 5,000, then you draw all the way back down to 7,900, and then you have to wait for the market to go up to 20, and then it just slowly creeps up. Then you're at 27, you draw down to 24, and then you go up to 37, and then you have a huge drawdown, right? So you go back to square one. Now, that's something really important with Happy Trader, is you don't necessarily have to ride this thing out like we do in the back test. For instance, if you see a huge rip in the market, let's stretch the market out a little bit, and you get an uptrend signal and it goes up to here, maybe take some profit, right? Maybe trade some micros, do what you need to do. The reason we're showing you this back test is because it's going to show you that overall the expectancy and what Happy Trader's putting out there is going to be a positive expectancy. So if you're a trader who likes to hedge, this is absolutely perfect for you because you're going to get a higher return over time using even conservative instruments like the ES. Not that it's not leverage, but it's not the NQ. So you're sacrificing a little bit of that return for a little more stability in your equity curve. And that's really nice. Now, win rate, something else I want to go over it all the time. 33%, that's about right in line with what we expect with Happy Trader. And that's because our expectancy is going to be positive. But if we go to the list of trades, you're going to see these winners in white are going to be a lot bigger than most of these red losers. Now, we are going to get more losing trades. Let's not be mistaken. We're going to get these big drawdowns. But then once the market starts going up, we're going to more than make up for it. And you're going to see that overall the performance summary and the positive expectancy on the overview does demonstrate that. And that's really going to be it as far as the ES test. A good way to make a simple 88%. You can see the net profit, $44,000 on a 5K starting account. We could jack this up a little bit. Let's say we wanted to double it or even triple it. You know what? Just for the heck of it, let's do a $100,000 account and let's do 5 contracts and let's see what that looks like. And just to have a little bit of fun in this video, why not? And you can see here that if you do any sort of scaling in, if you were to say scale in for every couple $1,000s that you get at a contract, and then if you go down that same amount, these are some things that we're going to be programming into the system, scaling in and scaling out. But for now, we prefer to let traders implement their own risk tolerance to the system, and we just present the trading ideas in the form of our uptrend and downtrend signals, which have this great expectancy. But you can see here, if we're using a way bigger account, things are a little bit different. But look at the net profit, $221,000, and we're holding at that 33.91% profitable for a 221.13% drawdown. Not as crazy as the NASDAQ, not as crazy as Bitcoin, only 56%, not too bad. But you know what? Sometimes you have to take profit when you're hitting these upstreams here, and when everybody's getting hyped up, start taking some off the table. And this is not financial advice. This is for educational purposes only. But what I like to do is take some off the table when we get huge run-ups. Wait for that dip because you can see over time the market does like to do those dips, right? You don't know when they're coming, but they do come. And when they do come, they're usually pretty severe. Like today, we're starting to get a pretty rough sell off in the NASDAQ that looks to be accelerating, and we're getting some profit taking. And you could tell that it was coming for a couple days. And now we have this signal on Happy Trader, and you can see if we remove, you can see this downtrend just dumped really hard. Now we had a potential trend reversal, but we can't count on those signals. Those don't backtest well at all. You need to be looking at our signals here, this downtrend confirmation signal, which is really going to give you a key indicator that this sucker is definitely dropping. That's going to be the video for today. Really excited to show that even if you're using a very big account with a lot of contracts, you're still going to beat the S&P 500. So you can just simply look at the numbers. They speak for themselves. These are returns that anybody's going to be happy with. One of the biggest things that I don't think I've mentioned in any video is that, especially right now with everything that's going on in the world, and let's reset the chart view, a lot of folks out there, they just want to dollar cost average or keep their money in the market. Markets are not guaranteed, and that's why on every single stock that you buy, every mutual fund that you buy, annuities, whatever it is, not guaranteed, okay? These instruments can lose value. Yes, your cash is secured as far as if you lose your cash, but as far as the stock value, the stock values can go down. And Happy Trader will give you a great way to not only beat the market, but to be able to capture and then exit the market during some of these fluctuations, especially during the short side where you get to take your profits. And again, if we just go into the list of trades, you might take a large string of drawdowns, but ultimately your expectancy is going to be positive, and you're going to end up with some of these trades here that are going to definitely be no-brainers as far as taking off the table. And the last thing I'll mention is that even on the losing trades, going from signal to signal, you have a lot of opportunity for run up. So you can take profit if you're a more conservative trader. If it looks like the market's starting to go down, when you're on a long only and things are negative, you might want to take some off the table. And that's what a lot of these institutions are doing on days like today. And that's why not everybody's just buying the dip all the time. They're going with the flow of the market. And you can see, and in many cases, and in this case particularly, we had a huge run up. So why hold the trade, right? So why hold it to a negative when you have a run up? This might be a situation where you either want to put a stop at break even. Again, not financial advice, but potentially put a stop at break even, or just take some of that run up as profit and then let your long trades. This just serves to show you that our indicator, just using it in a very rudimentary sense, will give you a higher return than the S&P 500. My name's Ryan. I'm the CEO and head quant here at happytrader.io. Have a great day and happy trading.